This weekend's events were absolutely devastating when considering the amount of innocent lives lost and people who were terrorized without warning. As expected, when war or threat of war arises, markets fall and interest rates come down. And today is no different, with rates down just a tad from this past Friday. Last week, we saw rates bounce back and forth following several reports, but were hammered on Friday with the nonfarm payrolls report coming in with 336,000 new jobs, almost doubling what was expected. The Federal Reserve is closed today in observance of Indigenous Peoples Day. And in this data-driven bond market this week, we are highly anticipating the Consumer Price Index report, which comes out this Thursday. The San Diego median home price has decreased by 4% from its peak earlier this year. Now remember, we saw the same scenario last year, increased rates followed by a decrease in price in the last quarter. New listings increased this week by a whopping 34% from the previous week, with active listings increasing just 3%. This means that the absorption rate continues to stay high, sitting around 85%. So if you're a buyer, you're going to see in some areas some price softening, as well as more properties available, especially in this past week. But keep in mind, you still need to move quickly on these homes. So if you're looking to get pre-approved or just thinking about it, send me a message and we'll get you all set up this week. Be sure to follow me to stay up to date on this week's market trends.